Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right. Good morning, guys. Welcome back to another live stream. Thank you for being here. We got 127, 130 people here just tuning in as we get started. And thank you for being here. We are jumping into another exciting week. This week is actually a really key week for financial markets. I was having a look at the economic calendar here this morning just for the week ahead. So although today is a little bit quiet in terms of news, market is still moving quite a bit as we still have some really important stuff coming this week. So on Tuesday, we'll hear from the RBNZ. Of course, that is the Central Bank of New Zealand. Anytime a central bank is reporting, the market keeps an eye on it because what one central bank does, especially like Western, allied central banks, what one is doing, typically the other ones are listening, echoing each other, or, just kind of paying attention to one another. So if there's interest rate, dovishness that kind of stems out of this, that could be an interesting event, not only for the New Zealand dollar, but also for gold and for other central banks watching. At the same time, the big day of the week this week is going to be Wednesday for sure. We have core CPI, we have CPI, CPI year over year. All of these are going to be incredibly important to financial markets. In fact, this is probably, in terms of data points this week, this is the biggest one on Wednesday. Because if you get hot inflation here today, or not today, on Wednesday, it will be just incredibly impactful to markets. Let me explain just how important this number really is. Right now, we've seen the stock market continue to bounce back, regardless of what I would say is a pretty sketchy yields market jump. So I'll show you, or the yield, right? The 10-year yield is on the rise. And I'll show you that this is not usually, at least in recent times, associated with a positive thing for stocks. If you're getting a rising yield on the 10-year bond or 10-year government note, if you're getting a rising yield, what that's telling you is that the bond market is saying that they think inflation is going to be problematic. They think that the U.S. economy is strong, and we saw evidence of that with last Friday's jobs number being really strong. What that is pointing out for us is that the bond market thinks the economy is staying hot and inflation will stay sticky as well. Remember that if there's more economic activity, it typically keeps prices elevated because there's strong demand from consumers, from businesses, etc. So as we approach this CPI number, if this does in fact continue to beat expectations, or I guess improve, they're hotter than expected, right? Because beat is maybe not the right word if you're talking about the stock market. If you get 3.5%, for example, and inflation seems to have actually bottomed out, that's going to be very, very nerve-wracking for traders and investors who are watching things like stocks and gold, etc. So basically this week, if you get hot inflation, it'll probably strengthen the dollar, and with it will probably cause gold and the stock market to drop. If, however, it comes in cooler than expected, the opposite would be true. People would probably cheer and celebrate the idea that interest rates could actually come down because inflation is getting put under control. So that's why Wednesday's number is going to be so incredibly important to financial markets. Now, what does kind of scare me, what is a little bit nerve-wracking to me at least, is that you have the NASDAQ, you have the S&P 500, they're still trading near all-time record highs. At the same time, you've got gold, which refuses to stop going up. At the same time, you've got oil, which refuses to go down. Did you guys see oil overnight? Of course, I'm long oil, so I got very glad when I saw that this level of support that I marked out and put my stop loss below got held beautifully. Look at this. So it dropped in the early components or early opening up during the market this week and rounded off just shy of my stop loss and has rallied back. Oil is just on fire right now. Same with gold. Both of those commodities just refuse to quit. They just keep going up and up and up. And that will change at a point, but I would not hold your breath. That's been my perspective on the stock market as well. But gold and oil are now doing the same concept. I would not try and time the top of these moves. They just seem indestructible right now. And while that won't last forever, it is the prevailing story currently. Commodities are hot, and trying to sell them is a rough game. So again, I am still long oil and gold. Here are my current positions on it. They have just become really good trades for me. And you know, I was early a few times. You know, I didn't have, this wasn't like my first attempt to get long gold and oil, but it doesn't even matter, right? The cool thing about trading when you trail stops and you let winners run is that you can have a couple losses trying to get into a trade, but then if you catch the good one, that's all that matters. You just trim and, or I'm not trim, trail and trail and trail and let winners become huge. And that's what we've done on gold and oil. So these trades have become monster positions and they weren't necessarily taken on massive amounts of risk, right? Anyways, gold also probably time to trail a stop. In fact, I'm gonna need to trail a stop yet again here on gold here today. So I'm gonna go ahead and mark up a fresh level of support. We're looking at the 4-hour chart. I entered this thing so far back now. I'll show you on the daily chart in just a moment. But first, I think I do need to trail a stop on this and just let's check on that one. So again, gold is up like just insane amounts here in the last couple months. Anyways, stop loss is going to get moved up here. So I'm going to put my stop loss just below. Again, if you guys were watching gold on the open, I don't know if you guys saw that, but oh my goodness, gold on the open wicks down here very quickly to this level of support, and buyers immediately and violently bought the dip. So for me, this is a market I want to stay long. I love the price action. I love the fundamentals, but I've got to continue to trail stops and be prudent with my trade. So what I'm going to do right now is I'm going to trail my stop on GLD, which is where I've got the trade open. So stop loss is about 1.4% below current price. So let's do the same concept here, 1.4% below current price. It's going to put us at 212.72. Okay, I'm going to modify that trade. So stop is trailed on GLD and on XAU USD, where I track the spot price. So let me go ahead and just really quick, while I'm on the subject here, we're going to, I'm going to update this in the VIP room. Okay. Okay, we're going to update. Gold entry is the same. Stop loss, however, is getting moved to 222.9823. Whoops, let me not do that. That's so weird. My number pad is doing something weird. 22.98.23. On GLD, we're trailing the stop to, that's so strange. My numpad, for some reason, is when I hit the 2 button, it's doing like the down arrow. So I have to do it. Anyways, 212.72, GLD ETF, trailed in profit, trailing stops here in gold after a new all-time closing and intraday high. That is still true. Previous resistance on the 4-hour chart. Okay. I'm just going to take a quick picture of this as well. Okay. All right, got the pretty picture. And boom. Okay. Trade update has just been sent on Discord. For those of you guys who are in the VIP room, just head over to the commodities trades channel and you can see that. Also, we'll drop the free Discord link if you guys would like to join that. It won't include the trading signals, but you can still see some analysis shared each day. Do you use Webull and Oanda as well? Yes. There are sign-up links that give you special perks in the description down below. There are also referral links. So if you use them, you'll be helping out the channel, but you get some special perks in return. All right, let's switch over here just to full screen. Okay, so I got the stop trailed, guys. We are up to date on that. I also wanted to show you guys the latest COT data. I was looking at this morning. So S&P, actually, let's make sure last update was April 5th. So perfect. Okay, so S&P 500 was the biggest net change. Very impressive there. The Nikkei also, Swiss franc, pound, US oil. Love to see this. Gold actually had slight selling going on from institutional money. Not heavy. I wouldn't take this as a huge sell signal, just a slight sell. US 30 got sold, euro got sold, yen got sold, dollar got sold. If anything, dollar getting sold is also kind of positive for gold. Pound, oil, I'd love to see this. We continue to see on the EDGEFINDER, oil has just been such a monster signal from the EDGEFINDER. We continue to see that. The commitment of traders data came out really positive, gave us a +3, which bumped our score to a +11, which makes me very happy to continue holding my oil long position. So let's go talk oil. Do I need to trail a stop on oil here this morning? Look at that. Indices flipping red here on the day now. We'll check back on that in just a second. Oil is ripping. Again, I think that they're just, for me, if I'm looking at the indices, if I'm like heavily long indices right now, I'm concerned because you're seeing gold rip, you're seeing oil rip, you're seeing yields rip. All of those things are scary to equities traders. So I actually would not be surprised if we do see a down day on the S&P and the NASDAQ. But we'll see. Again, the NASDAQ, and they've defied greater odds before. So we'll just have to keep an eye on it. Anyways, U.S. oil continues to rip. Let's take a quick look at, in terms of stop trailing, I don't need to do any more. I've got my stop trailed. We wicked down here. I'd like to see this clear the highs. If that does happen, then beautiful, and we'll trail stops further on these trades. Euro dollar, nothing there. Pound dollar, nothing there. Dollar yen, kind of interesting. Dollar yen's trying to break and retest this area, though. For me, I'd probably like to see this clear a little stronger because I don't know that this is, really a clear breakout just yet. Depending on how you drew your resistance, right? You could just say we're sitting at resistance. So I'd like to see on dollar yen a breakout here. If you're watching currencies, that's probably one of the only ones that's really interesting to me right now. On the currency side of things, dollar Swiss, dollar CAD, Aussie dollar. Also, I mentioned in terms of the EDGEFINDER, I just wanted to shout out, I haven't mentioned it yet. We are currently doing our biggest sale of the year. If you have not heard, we are currently doing 45% off the EDGEFINDER. This is, no joke, our biggest discount price that we do of the entire year. If you're somebody who's watched my channel or you've watched our live streams for a while, take advantage of this. Consider this offer. This is a 45% off. It's a massive savings on the tool, and it is the best discount price you will get all year on the EDGEFINDER. We are celebrating 2 years since we kicked off and launched the EDGEFINDER. So we've been developing it for longer than that, but we made it publicly available about 2 years ago. And to celebrate that 2-year milestone, we are doing, like I said, our biggest discount of the year. So if you'd like some more information about getting a copy here while the price is so low, we just dropped a link here. If you click this link, this is where it takes you. It takes you to a live chat support center where you'll be able to speak with someone on our team. So if you click chat now and you click EDGEFINDER 45% off, you can lock in your huge discounted price of the EDGEFINDER. So while we're on the live here, take advantage. It's 45% off. That is massive savings. So take advantage of it. There you go. And Merry Christmas very early in the year. So take advantage of it. Anyways, other things that are interesting here, dollar yen's getting a really strong bullish lean here. If I take a look at, let's go by category really quick, major currency pairs, dollar CAD bullish, dollar yen bullish, Kiwi dollar, pound dollar bearish. So just for the currency traders out there really quick, pound USD. I've mentioned this one. I'd be interested in pound dollar if it broke this daily structure. Otherwise, kind of just sidelined. Kiwi dollar. This might actually be interesting. Kiwi dollar might be interesting on the 4-hour chart. So if price does give you a pullback here, that might be something I'm looking at for a breakout retest. Dollar strength seems preferable. It's not necessarily that I think, oh, they're going to stay higher for longer forever. I still think they could because yields are up so much. The bond market thinks they will. But that being said, in comparison to the Kiwi dollar, right? All of our economic indicators, barring a few, are signaling mostly dollar strength. So it doesn't mean that I'm like a huge dollar bull because we're not getting a resounding everything bullish for the dollar, but a lot of things are. And so I'm not going to ignore those signals. I would actually say in terms of a lot of the major currencies, I would favor the dollar due to all the strong economic data we've been seeing relative to peers. And also, again, with yields up, as well as that jobs data that we saw on Friday, I actually think the dollar is likely to stay strong relative to its peers. I think if you're conservative with it, maybe you wait for something like this. Maybe you wait for a breakout of this high and then you look to take advantage. But I would say if you look at the 4-hour chart, we've hit a level of support here. And we marked up last week this level here, right? Resistance, support, came back, doubled as support again very nicely. As long as this level holds, I think the dollar strength could still be there. If you break out to the downside, then yeah, it's kind of off the table. But I would say I would lean more dollar bullish than I would dollar bearish at this time. There goes the indices sliding here a little bit this morning. The NASDAQ just completely U-turned. That was kind of a crazy reversal here. Right, there's the 1-hour chart. It was shot up and then now coming back down. And another check on commodities. Gold just about flat on the day. Oil rebounding all the way from its depths in despair, came all the way back. Silver up 0.62%. Silver's been on a rip. I don't know if you guys have been keeping an eye on it. Silver has been way more impressive than gold even. It's up like 25% in the last like 30, 40 days, which is incredible. So very impressive. And we love to see that for metals bulls in general. That's what you want to see. You want to see silver exploding in price. You're even seeing platinum take advantage of it. What about copper? I'm just curious. Copper, look at copper, man. Copper's going nuts as well. So you want to see generally for metals traders in general, you want to see participation across the board, similar to stocks, right? If you want to see a healthy stock market, usually you want to see participation from lots of different areas of the economy. You don't want to just see, a lot of bears have really pushed on the idea that, the stock market rally has only been participated by, big tech. And that's kind of changed. You've seen a lot of other areas coming to life for the stock market. And that's adding, in my opinion, some validity to the push. Doesn't mean we don't, need a pullback. I think we probably still should see a pullback. But it doesn't mean we have to have one, and participation is generally good. Same thing for metals. Here's the Dow bouncing slightly off of this level of support. We'll see if that can continue to be the case. And as we come back up to this area, are we going to resist this 39,200 and go lower? Or are we going to break that and kind of continue higher? That's where I'm curious here today on the Dow. Again, I mentioned this earlier, just a reminder, 45% off sale is a limited time offer. If you are thinking about it, take advantage. We'll drop a link here in the chat so that you can send us a DM, send us a message if you want that discount. Really quick, we're going to take a quick break to thank our sponsors. And then shortly after, we'll be right back with Ivan to take a look at some more charts. Check this out.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, Click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, and we are back with Mr. Ivan. Hey, Ivan, how's it going, man?
It's going all right. Just not trying to put myself in the middle. Yeah, good.
You look great. You're in the middle now. Nice shirt. We have similar shirts on today. Looks great.
All right.
Okay. Ivan, this week.
Did you get to buy Wux last week, by the way?
Did I get to buy what?
Wux, like something for your hair, like, or is it just natural today?
Today it's just natural. Today I just combed it and I said, wherever the wind takes me kind of thing. We'll see where it goes. Ivan, last week jobs were really strong. We had a really impressive NFP. Wage growth came slightly down year over year, but overall, pretty hot jobs number. And meanwhile, the question is this week we hear from a couple central banks. We have the meeting minutes on Wednesday. We get CPI this week. What are you looking out for this week? What's on the radar for you?
I think I am quite interested in not trading Euro and Canadian this week because I am yen weakness this week. So I'm taking a very close look at dollar yen coming up to 152. But so my kind of preview is bearish CAD because of CPI, bearish Euro, also ECB and Bank of Canada. Both of them are bearish because they're going to talk and they're going to acknowledge that they need to start cutting rates soon because they're both at 2. Euro is at 2.5 and Canada is 2.8 inflation, contrary to dollar, contrary to America. So yeah, that's kind of where I am.
Yeah, I think despite the jobs data being hot, with the jobs data being hot and hearing from the central bank, you mentioned Bank of Canada is on Wednesday. If they sound dovish, meanwhile, jobs data still is incredibly strong in the US. I generally agree with that because if you get inflation cooling for these places a lot faster, they're going to have to start cutting rates. And if the US, if you look at the yields world, it's signaling that the bond market doesn't think inflation is really seriously coming down anytime soon. You can see the 2-year yield is up and the 10-year yield is at a multi-month high going back since November. So, again, the idea that inflation is just meaningfully going to continue to come down is not necessarily the same case right now. In fact, it makes me a little bit nervous for equities, Ivan, when it comes to inflation was meaningfully coming down. Expectations for rate cuts were very strong here. They've rebounded a little bit, and yet we still have Jerome Powell, the chair, still signaling 3 rate cuts this year. Who's right? Who's wrong? What do you think do you think we're still going to get 3 rate cuts this year?
I had a very interesting meeting this morning with the VIP group, and I opened up the question: Are we going to have a rate hike this year? Because currently there's a slight overchance, there's slight more probability for 2 rate cuts this year, and we might, in the case of we see a rebound in inflation, which are supporting that idea, we might have a rate hike, and that is it's a long shot. It's an extreme one, but to have 3 rate cuts, I think that's off the table at the moment with the current PMIs coming out. I don't think we are close to rate cutting as much as we were in December. I'm just looking at the 10-year T-note. As much as I see the dollar, those are quite close in price action if you add them on top of each other just by looking at them. But yeah, I would argue that the 3 rate cuts until the next meeting, I think it was 1st of May, they're lagging because they have more data in between, so we have access to. But in the end, I think we may not cut this year, which is a very scary thought.
Yeah, and if we don't see rate cuts this year, I would actually say that the market itself, like the stock market, probably would see a pretty good pullback. Because again, I would argue that the market is very much pumped up on the idea that rate cuts are coming. So if the yields world is signaling, yeah, 3 rate cuts is not coming, but the stock market is hoping for that. I don't know. Could that lead to what kind of pullback? Is that, you think, 5% pullback, 10% pullback? And obviously, as you mentioned, if you get rate hikes even coming into the conversation, that's probably a 15% plus pullback on the S&P 500. Would you agree?
In as much as I can agree, I think that the market is a bit. Well, we have put a lot of eggs in one basket. We're quite high, but there is less connection between rate hikes and stock market falling. So to me, it's more like it will probably just make it pause it for some while, and then we would reignite whenever. Because if we take in consideration what has 5% increase of interest rate done to the market, and it hasn't been considerably. We are, as we're speaking, we are at all-time highs, as far as I remember.
Yep.
So it isn't nowhere near. So as a bad situation, oh, we're gonna come crashing down. I don't think so. I think we're just gonna have about maybe a 5%, but that's
yeah. I think that, like, when it comes to the stock market, just being regardless of the pace of interest rate cuts, the idea that we are going to cut, as long as that continues to stay the narrative, the stock market's going to stay relatively supported. The only thing I would say that would completely wash that idea out the window, throw it out the window, would be if rate hikes became a concept again. But there are some things that are definitely worrisome to the idea of getting inflation down. For example, oil just does not want to quit. It keeps going up. And, between the 10-year up, the oil market up, these things are, signaling inflation. And not only that, you also have gold up, arguably not just because of rate cuts. Rate cuts might have been this move, but also geopolitical tension continues to push gold up. And with geopolitical tension, one thing to remember with geopolitics is that if they escalate, that too is inflationary. Because if things escalate in the Middle East or things escalate in Eastern Europe, both of those scenarios probably end up being more money printing from Congress, and money printing inflationary. So again, geopolitics, oil signaling, supply-based inflation could still be in the picture. And at the same time, the U.S. economy, jobs, really strong. To me, it's a time to be very cautious if you're looking at indices, because they've had such an incredible run. While I'm not short them and I'm not advocating for shorting them, I do think it's very much at the, I think most likely we either go sideways or we go down. But to me, I don't see right now us repeating this process into the future. Could it happen? Sure. The market's done crazier things than that before. But I think it's probably a time to step back and just say we've had an amazing run in stocks, and there's just a lot of forces that are at play here. Would you agree, Ivan?
I think most of your run at the moment is a bit of a perfect storm. We are ending rate hike. We're having election year, so most of the money will be made now, or it'll be invested now, so they can be taken up, so they can have money before the election. Seasonality is strong at the moment, and well, there is available money, evidently so. So for me, I think it's just a perfect storm that this bullish run has had ever since start of October, which we called out. And on the other side, for me, global politics is kind of, it's becoming a bit more constant. It's a bit more solid and set. So it's just a more like a slow burning thing that is there, instead of it being very forefront volatility driver. But yeah, I think it's a perfect storm for S&P going higher. Has been, may continue.
Yeah, and that is true with the election cycle going on. I wonder what will happen with the price of oil too, because a lot of people would have argued before this run up that have said they're going to keep oil prices lower to support the election. But remember, they're players on either side of oil. I saw something that was kind of interesting. Somebody said that Putin is essentially long oil while Biden is essentially short oil. I even saw that there was something from the Biden administration actually slowing the production of oil, or looking to slow the production of oil, simply because or increasing, right, to help with slowing down this oil price rise. Because of course, if the oil market continues to go higher, that hurts the election story. In terms of the current president standing, if he's going to get reelected and people are paying a bunch of money at the pumps, nobody's going to like that, and that's going to bode very terribly for votes. We'll see if oil can keep ripping higher. Anyways, though, it's been pretty defiant and moving higher, and definitely could cause some concerns on the inflation front, for sure.
I just find it funny when Americans are complaining about oil price at the pump. Like, you guys are paying pennies compared to what we are paying, but nevertheless, it is a concern for CPI, by the way. It is. This isn't necessarily helping CPI coming lower. Well, we're gone from $77 beginning of March up to now $86. That is $9 up.
Yep.
That is going to have a positive contribution to the CPI story. So for everyone who's hoping for a lower than expected CPI, I think that month over month was going to go a 0.1 lower, but year over year 0.1 higher. So a 3.2 was expected. We might see a 3.3, a 3.4 at this point.
Yeah, it's showing here, at least on ForexFactor, the forecast is 3.4, which is will be very interesting to see if that does come out, even as expected or higher. Let's for the stock market's sake, let's hope it doesn't go higher than that, because if it goes 3.5, the concerning thing is that if inflation is bottoming out, that's not an exciting scenario. And in fact, if inflation truly is bottoming out for the U.S. economy, Ivan, your concept there with interest rate hikes being introduced again at some point may not be as crazy as you think. If inflation is really bottoming out, again, the Fed is going to address that. They're going to look at that with scrutiny. So, I'm just pulling up just to show you here. Here is, I've got Europe, I've got the UK. So inflation for the US came down for a while pretty meaningfully, but it is kind of stagnated. What you definitely do not want to see, you do want to see it if
you
you're
need glasses.
If you see,
did you try to follow the blue ticks now?
I tried to give you a rough moving average.
Yeah, because there's a bump there,
Yeah. Let's draw it again. We'll draw it again. Come down, and then it came up, and then it came down, and now it's kind of flatlining. But that's the thing, Ivan. If you're actually seeing this 3% level kind of become like a big support level for inflation, that is seriously concerning if it were to ramp up and to actually pick up on the idea of oil. So I don't know, maybe your interest rate hike scenario is something to at least be aware of.
Well, at least quote me 2nd or 8th of April 24 that I did mention that we might hike, but no, that's a crazy story. But you never know. But in all seriousness, this costs a lot to the American people, or to anyone that has high inflation. And Fed says that they're aware of it, that that people with lower income status gets it much worse and worse. Everything becomes more expensive. Their salary doesn't necessarily increase, but everything has become way more. They made a study about in Norway. They said that in a year that the cost has risen by $17,000 a year. And when your income is 40, but your cost has all of a sudden increased by 17, that margin that is left is very thin. We've also seen that in the decrease in deposits, as people's bank account has become increasingly less. So I don't want inflation to go higher. Just to make
Yeah.
that short, just to make that clear.
No, inflation is, as you mentioned, it's an unfair thing to people of lower income. It's way more hurtful than the higher income. Obviously, one thing to add to that is people with higher income usually have assets that appreciate, substantially too. So they're not only, the amount of their income that goes towards basic needs is not necessarily percentage wise increased as much as somebody who has a lower income, but also on top of that, they're profiting almost from inflation, like house prices and things like that. Regardless, inflation is bad for everyone. Inflation is terrible for the economy. So we'll see. Wednesday is big. And the Fed has mentioned both sides of their mandate are important, though recently they've been, at least Jerome Powell has come across a little bit more dovish on the side of wanting to keep job security. But we'll just have to see. Again, it is a really big week for that inflation story. And if you do see a spike up, I wouldn't be surprised if that was kind of the straw that broke the camel's back in terms of the stock market. If you see inflation tick up substantially from what is expected, stock market might start to price in that possibility that the Fed is not going to cut rates this year, which I think would be short term very, very bearish for stocks. Long term, maybe not the end of the year because into the world, because a lot of companies still have a lot of growth, and if the economy itself is doing okay, that's not necessarily like a end of the world for stocks scenario. It just might mean we have to give back some of those gains that we've made off the idea that rate cuts are coming. We'll have to see though. It's going to be a big week. Ivan, is there anything else that you're watching personally this week?
Also weakness in yen. I'm watching 152 on US dollar yen, which I'm slightly concerned about it. Secondly, I'm watching people asking you about gold, and I've seen people asking like they enter the gold trade. I'm not going to go into that area, but I'm just saying that if you are trading gold now, yeah, okay. I will not be happy with you. Let's call it that. But dollar yen, I just want it to fall. But with the rising inflation, with the divergence in interest rates, it is designed to continue higher, unfortunately.
Yeah, dollar yen up here at 152. I think this is I think a lot of technical traders are probably watching the same level and really watching the price action at these levels, because if you get this big, solid candle, just to throw it as a possibility, or for that matter, the other way, it's perhaps going to have follow through either way, simply because if you get a big, positive candle here on the dollar yen, it might just signal that maybe the Bank of Japan is not willing to deploy the resources necessary to keep price there. And if you do see a big red candle here, perhaps it's a little bit of a sigh of relief for the Bank of Japan, and they may see a little bit of follow through the downside. So really a pivotal spot. But what makes me a little nervous about this, Ivan, is that we're doing that same concept that we've seen on the Swiss National Bank story that we've talked about so many times. We're just consolidating at a key prevention level. And if that falls out of the floor, the yen could weaken dramatically if something changes in that story. On the contrary, though, it very well could just be topping out here, and you might get some wonderful risk to reward. For me, I'm just waiting for the next big catalyst to make a decision on this.
Just waiting. All right.
That's right. That's right. So I just want to say also, Ivan, in terms of your coaching sessions, they are fantastic within the Discord group. I've mentioned this before, but for anybody who is newer to the stream, if you guys are thinking about or looking for some sort of mentorship program, if you're looking to work with somebody on your trading, I know that a lot of traders out there would massively benefit just from sitting down and working through what's not working for them in their trading. If that's something you're interested in, Ivan does offer one-on-one coaching. So I just wanted to mention that. If you guys are inside of the Discord channel, inside of our Discord channel, the A1 Trading Discord, Ivan does dedicated coaching webinars throughout the month. If you're not already taking advantage of those, make sure to check in on that. And also, here is Ivan's YouTube channel. If you click this link, you can find out information about what he does. You can see some of his great content, and you can also, of course, contact him there about any one-on-one coaching that you're interested in doing. Ivan, thank you very much for joining me, and have a great trading week, man.
Thank you very much, and you too.
See you, Ivan. All right, and there he goes. He's off. He's off and on to bigger, better things. Anyways, guys, this week is massive. It's going to be a really, really important one, and we will be live streaming for all of it. Just a quick reminder also, if you would like to get access to our tools, this is our biggest discount of the year. We're currently doing 45% off. If you haven't already, take advantage by sending us a direct message using the link that's being dropped in the live chat right now. So if you click this link, you'll be connected to a support member on our staff who can get you set up with a copy of the tool for the biggest discounted price of the year. With that said, it's going to wrap up the show here. Thank you very much for hanging out. Hopefully it was helpful to you as we broke down kind of the outlook for the week. And we'll, of course, have more content coming to you soon. Thank you guys very much. Have a great rest of your day.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the EDGEFINDER for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.